Thanks for clicking. Canada's housing market is overvalued by 38% and is in for a 10 to 20% correction. This is according to a new report released by the Bank of Montreal. This report comes on the heels of multiple reports of growing buyer's remorse in Canada's real estate market, with a growing number of buyers trying to back out of their purchases, thinking that they overpaid.
It's the ultimate screw-over!
With more and more home buyers regretting getting into the market when they did, and more home buyers sitting out, waiting to see which way the wind blows, the report by Bank of Montreal attempts to address where the market is going to correct, by how much it's going to correct, and how long it will take to correct. So what I want to do today is go over BMO's report, looking at where they see us having the biggest corrections in Canada, discuss how much of a correction they think we're in for, and both how long it will take for the real estate market to bottom, and how long it will take for it to recover. The Bank of Canada, the architect of Canada's real estate bubble and its imminent pop,
Thank you.
will be releasing its interest rate announcement next Wednesday, June 1st, which will obviously have major effects on the state of Canada's real estate market. We'll obviously have updates out on that announcement on this channel. Click like and subscribe to get those updates, but for now, let's get into BMO's report. BMO's report begins with the premise that a lot of the price gains that were made early on in the pandemic, early on in 2020, were driven largely by demographic factors and by supply side, meaning that we just didn't have enough supply available for Canadians for the types of houses that they wanted. However, the price gains that we've seen in 2021 and this year have been driven largely by excess demand, meaning low interest rates, market psychology, fear of missing out, and froth. With the Bank of Canada curbing demand by the continual increase in our interest rates, these factors are reversing, which is going to lead to a major housing correction. If we look at BMO's chart, we see that real home prices, that is, home prices adjusted for inflation over the past 40 years, have continually increased 3% year over year, with a major upsurge above that trend line starting in 2020 or at the beginning of near zero interest rates. It's in this major deviation starting in 2020 where BMO gets its calculation that our home prices are sitting 38% higher than they should be were Canada to have continued with this 3% year over year price growth rate. So the report is saying that if Canada had continued with its growth trend for the past few years, had it continued with its 3% year over year growth rate, our home prices would be 38% less than they are now.
Yeah, well, 2020 hindsight and all that, you know what they say.
Using this measure, that is, price growth above the historical trend line, BMO says the most froth has accumulated in the suburbs of Toronto, which are 41% overvalued. Even more froth is found in the exurbs, those cities that are 1 to 2 hours away from Toronto, such as my hometown of London, which could be as much as 70% overvalued. Other areas like Alberta have remained relatively low and are just starting to catch up to this historical trend line. So if we are on average 38% overvalued, how much of a housing correction can we expect given the rise in interest rates? BMO's report says that the current real estate market is based off an interest rate of 1.5%. And with the Bank of Canada set to raise interest rates by 125 basis points by the end of the year, BMO's prediction, with them set to raise interest rates, we should be ready for our real estate market to be able to handle interest rates in the range of 3.75 to 4.5%. As a result of these higher interest rates and the lack of affordability that will follow soon thereafter, BMO says we're in for a 10 to 20% house price correction. And BMO says that this is in line with the previous house price corrections that we've seen in Canada for the past 40 years. If we look at their table, which shows corrections in 89, 95, 07, 08, 2015, 2017, and 2018,
Not my first time.
we see that on average, house prices corrected 14%, took 3.1 years to get to their bottom, and then eventually did recover after 5.8 years. So it took 3.1 years for them to bottom out, and 5.8 years for them to get back to their previous highs. This is just an average, but does serve as a good bellwether for what we could be looking at. So to summarize, BMO says that following historical trends, Canada's house prices are 38% over and above where they should be. They're the most frothiest in Toronto and surrounding areas. And if we do follow historical corrections as they were before, we should be looking at a 14% price decline, which should take about 3 years to get to that bottom, and then another 6 years to get back to the highs that we're at now. Although I think the study was well done in that it did look at historical trends and it did look at previous market crashes, I would have liked to have seen more data on how long it took the real estate market to get to its highs in those previous periods in 89, 95, 07, 08, etc., etc. I would like to have seen BMO include how long it took for that market to build up to that point before it crashed, before we did see that big correction. Because we've had a fairly large increase in our house prices over the past 2-3 years alone. So one would think that if the market built up that quickly, we should see it come down that quick as well. I don't think it's going to take 3 years for this market to get to the bottom of its correction. I do think it's going to be fairly substantial, fairly quick. So if we are in for a 10% correction, I think that's going to happen within the next few months. Next 6 months, I don't think it's going to be 3 years. It's not going to be the same type of average that BMO has listed in the report. With that said, time will tell, and as we said, there's going to be a number of predictions coming out from the major banks, from the major think tanks on how this correction is going to go, and obviously we'll continue to have updates on those reports on this channel. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.